Welcome back to the channel, guys. I'm your host, Buckning, and today we are giving you the update on today's portfolio because we have a new position in the portfolio, and I'm going to tell you the stock pick for January 2021. It'll be the first stock pick of this year, but we'll get right into it and talk about every position that we have going into 2021 and the newest position we're adding in 2021 and kind of my plans in the future. But we're also going to update trackyourdividends.com to show you the dividend per year. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. So we'll just get right into it here. Today's portfolio value closing out at $2,100.19. We are down $10.09. That's down 0.48%. For the week here, we are down $19.81, down 0.93% for the week. For the month, we are down $23.05, down 1.09%. For the 3 months, though, once it loads up here, there was an error. There we go. We are up $210.27, up 11.13%. For the 1 year, we are up $230.19, up 12.31%. And for the all time, we are up $230.19, up 12.31%. So we're going to start with Bell Media, BCE ticker, closing out at $54.98. We are up 55 cents. We own 2 shares of that. Total position value $109.96. Our average cost is $58.05. Holds a portfolio at 5.34%. Today's return is $1.10, up 1.01%. Our total return since owning the position is $6.14 in the negative. We are down $5.29. Next stock is BMO, Bank of Montreal, closing out at $95.99, down 79 cents today. We own 5 shares of that. Total position value is $479.95. Our average cost is $81.32. It holds 23.31% of this portfolio. And today's return is down $3.95, down 0.82%. But we are up $73.35 since owning the position, which is an increase of 18.04%. And that is Bank of Montreal. The next share that we're going to talk about is Bank of Nova Scotia, another bank, closing out at $67.72, down $1.08. That is down 1.57%. We own 7 shares. Total position value of $474.04. Our average cost is $54.58. It holds 23.03% of the portfolio. Today's return is down $7.56, down 1.57%, but our total return since owning this position is $91.99, but up 24.08%. And that was Bank of Nova Scotia, right? Yes. Next position is Loblaws, closing out at $63.75. We hold 3 shares of this. Total position value of $191.25. Our average price is $64.02. Holds the portfolio. It's 9.29% of the portfolio. Today's return is $2.82, up 1.5%. We are down 82 cents currently since owning the position, down 0.43%. Next position we have is Manulife Financial Corporation, closing out at $22.43. We own 17 shares. Total value of the position is $381.31. Our average price is $19.26. It holds 18.52% of the portfolio. Today's return is $3.74 negative, down 0.97%. But since owning this position we've made $53.87, up 16.45%. And the newest position, Royal Bank of Canada, ticker symbol RY.TO, closing out at $104.68, up 9 cents today. We own 1 share. It holds 5.08% of the portfolio. Our average price buying in at is $104.42. Our total return is 26 cents. So we currently not we currently, but the stock itself currently 52-week high is $109.42. The 52-week low is $72. Dividend yield is 4.1%. And the market cap on this one is $148.84 billion. And so we're going to talk about this stock. This stock is not a growth stock for me. This stock is more of a value stock. And I'll explain why in this screen here. So this is the shareholders' information on Royal Bank of Canada. We'll just talk about it a little bit. Royal Bank of Canada, or RBC for short, is a value stock for me, and this I'm going to explain why. It is the number one bank in Canada. It has a total assets, I do believe, totaling of $1.62 trillion of assets. It operates not just in Canada, but 40 different countries, which is massive. The dividend per year since is $4.29, and that's an increase of 22 cents since last year of 2019. It is currently on an 8-year streak of increasing its dividends by roughly, I think, 7.5%, which is fantastic. But the reason I'm picking this as a value stock, and a lot of people probably who have returned to the channel and watched the channel are saying, wow, another bank stock. Well, this is the number one bank in Canada. It is also the only bank that really knew how to steer in what happened in 2020, when all the banks were going down like double digits, like 16-20%. RBC held its stock value, not stock value, but it only went down maybe 5 or 6%, but came back, and it is back. And if anyone's considering buying a bank stock, I'd probably recommend purchasing RBC, being the number one bank. Although it has the lowest dividend yield, mostly due to the high stock price of this company, it has a lot of value. I mean, the yield is 4.1%, sure, but it definitely knows how to navigate through tough times like we had in 2020 and ongoing. And it's going to be the bank that paves the way on how to navigate through those waters when it comes to growth in the company, making sure that shareholders are getting their portion. And maybe 2021 might not be the year that they'll increase the dividend, but they can definitely pay out the dividends. If you go down to the investors relations page and go through, the presentation, the dividend payout ratio is about 40 to 50%. And that's massive, and they just keep maintaining that. There might not be an increase in 2021, but they can definitely maintain their dividend payouts, even with the things that are going on in the marketplace. RBC had one of the biggest growths in their capital markets, due to operating in 40 different countries, and being affected, whether it was being affected, this country's being affected in the early goings with the stuff that happened, or it was recovering from what was happened. So it was able to balance it out, but it had record numbers for capital markets, and so a lot of people were started to invest during 2020, which is fantastic, and a lot of the time that is what kept these banks going, making up for losses in loans and things like that. Even though the interest rate in Canada is super low, and it's going to be hard to make money for these banks with the low interest rates, they will still be able to make funds, make money through capital markets and people learning to invest and investing on a regular basis. So that is why I'm picking RBC, because it is the number one bank in Canada. It knows how to navigate through these waters. It did so well during 2020, even with the downturn, and even though it was down for the most part, like we can even go to the 1 year. The 1 year, it was only up $1.49 year to date, at 1.44%, and you can see, like, sure, it might have dipped down. Lowest point looks like I can hit it here in March 22nd, coming in at 72. No, lower than that, 72.25, but a very quick recovery, as you can see, and almost back to the levels it was pre-March, pre-March, end of February, which is fantastic. And that just goes to show, the resistance, the strong will that this company has to navigate through those times, because they're past now. But yeah, that is the new position in this portfolio. And again, it's an 8-year dividend growth streak. They've been paying dividends for quite some time. This company's over 100 years old, and it's the number one bank in Canada. I would definitely recommend it if you're looking into investing in banks, creating a position in banks. The first one to go for is ry.to, which is Royal Bank of Canada, because it is a good value stock for sure. And so we'll finish up here, and then we'll head over to trackyourdividends.com to update that tracker. So TELUS closing out at $25.44, up 23 cents, up 0.91%. We own 4 shares of that. Total position value of $101.76. Did I say TD? No, TELUS. Yeah, TELUS. It holds 4.94% of the portfolio. Today's return is up 92 cents. Our total return since owning the position is 32 cents, up 0.32%. The final position that we have is TD, which is another bank, Toronto Dominion Bank, closing out at $71.94, not up, but we own 3 shares of that. Total position value of $215.82. Our average price is $71.94. It holds 10.48% of the portfolio. It is up 6 cents today. Our total return is negative 1 cent since owning this position. And that is pretty much it. And we have $41.42 in cash. So that is our newest position. So we'll keep it on this screen here, and we'll head back over, and we will head to trackyourdividends.com. So same thing. We'll just go through the summary right here. Total portfolio value with just the stocks is $1,954. We are currently up $213. If you were to build this portfolio as is without the new position, you would have a 4.61% dividend yield. Our yield on cost currently is 5.17%, from buying the positions at a time where they were lower than what they currently are valued at today. And our annual income is $90. So we are going to go ahead and add a new holdings, ticker symbol RY.TO, not top, TO. It's going to go in the default portfolio. We bought 1 share of that, and our cost basis, let me look that back up, was 104.42, and we'll add that. Did it update? I don't think it updated. Refresh. Did it update? Okay, let's try that again. ry.to, 1 share, cost basis of 104.42, and add. There we go. So let me close this. You can see now Royal Bank of Canada is added in there. 0 profit today, but we did buy it at 104.42. Closed out at 104.68. Dividend yield currently 4.13, 4.14 for the yield on cost, and annual income of $4.32, which brings our annual income to $94. Our portfolio value is $2,051. Did I mess that up? Nope, that is right. $2,059. I'm having a tough time talking and speaking, and words coming out of my mouth. I don't know why, but yeah. So that changed. Dividend yield of 4.58% if you're to build this portfolio today. Our yield on cost with this portfolio is 5.11%, and our annual income is $94. So that is the stock for the month of January that we will continue to buy until I do believe it's January 24th, and we'll get paid the dividend in February. So I'll continue to buy this, increase this position for quite some time. For January, and then we'll move on to the next position. So for this year, quickly, all we're doing, because now we have all the positions that I was looking at purchasing, and we are just going to look at increasing the amount of shares we have in each position. So as you can see, 2 shares, 5 shares, 7 shares, etc., etc. We are just going to increase those positions to increase the dividend, and that way we can just focus on doing that and not look at purchasing new positions till there's straight stability. There's already stability, but I want to increase the amount of shares I hold in each of these companies, and that is the plan for 2021. And so if you guys did enjoy the video, leave a like, comment, subscribe, and if you're just starting out, congratulations on starting your investing journey. But yeah, make sure you do your due diligence. I'm not a financial advisor. I'm definitely not your financial advisor, so do your research or go find a professional to help you out with that. Other than that, guys, I know I said I was going to make a quick update. This video is a bit longer, but hope you guys did enjoy, and we'll definitely see you in the next one, which is on Wednesday. But you'll see it on Wednesday, and that one, just give you a heads up, we're going to talk about the tax-free savings account because I get a lot of questions about that. I finally found some time in the schedule of doing these videos to make that video, so hopefully you guys did enjoy, and hope you guys had a great New Year's, and we'll see you in the next one. Bye.